Next, I just want to see what Dabur is up to. Okay, I think Sunil Duggal is there with us to talk about the numbers. Good having you, Mr. Duggal. Thanks so much for joining in. You know, coincidentally this morning, we were talking to a couple of analysts and trying to figure out what's going wrong right now in the FMCG space because of, because the numbers that have come out till now haven't been that great, even on the volume growth basis. What has your experience been? How is the scene looking like in the first quarter of the current calendar?
Well, it's too early to say for the current calendar, but last quarter was a bit of a disappointment in terms of category growths. The Nielsen numbers indicated a further softening in terms of the volume growth rates. So there's really nothing very exciting happening on the front as far as volume growths are concerned in particular. I think it was further aggravated by the fact that it was exceptionally warm winter, so which means that the winter products in healthcare and skincare, etc., also didn't perform as well as they normally would have. So all in all, it was not the best of quarters for anybody, including us. And in our case, of course, the big damage was done by the Nepal shutdown, which cost us over 100 crores of sales and perhaps something like 40 crores in profit. So that was a big overhang as far as Dabur is concerned in the third quarter.
What's the volume growth number like? I was trying to look at your release. I didn't find the number there. What's the number there?
The volumes degrowth, negative growth was 2.5%. And obviously largely on account of the foods business.
Had it not been for the exceptional one-offs that have happened in this quarter, you reckon your volume growth would have been impressive, or would you still have struggled because the industry by and large is facing a bit of a challenge right now?
Well, it would have been lower than the previous few quarters, but certainly much higher than what we have just told you. So it's hard to say how much it would have been, but perhaps in the 5% range is something which we would have expected to get.
Yeah, I think that's what Neeraj was trying to derive, Mr. Duggal, the fact that historically, what has volume growth been trending like for you in this particular quarter. This degrowth, does it change? You were talking about the Nepal business impacting sales. You're talking about how the foods business is seen a fall. Revenue there has gone down, in fact, 24%. Does that change in Q4? Does one read as the volume degrowth in this quarter as an aberration?
Yes, I think so. It's almost impossible to forecast what's going to happen in the near term. But definitely this quarter is probably where we saw the worst of everything in terms of the headwinds regarding weather, Nepal issue in particular, everything else. So we are looking forward to a better ride ahead. May not be as good as what we saw in the earlier part of the year, but certainly much better than the third quarter.
No, because you've been consistently maintaining that the growth for the year would be between 6 to 8%, if I remember correctly. Does that mean that your overall target for FY16 volume growth will get revised lower because you've seen a weak Q3 on volumes and you're not expecting respite in Q4? And how does that also spill over into your outlook for FY17 on the volume front on the demand environment?
Yeah. Well, so you're certainly right that we are going to moderate outlook. The quarter 3 damage has been something which is almost irreversible. And also, if you look at the category growths, they are showing signs of softening as we speak. So I don't expect quarter 4 to be any better than quarter 3 in terms of overall category growth rates. So yes, we will be revising our volume growth outlooks for the current year downwards from 6 to 8% to perhaps something like 4 to 6%. Now, going forward, what is the outlook for the next year? It's very hard to say. I think it's going to be predicated on a couple of issues. One is how is the monsoon going to pan out? Second is what kind of economic stimulus is going to happen to drive demand, particularly in the rural areas. If both these indicators are positive, I think we can look forward to a much better fiscal 17 as compared to the current one. But I think it's way too early to predict that. The budget would throw some light on it. And of course, the weather gods will have to play some role here.
So one is on pricing. Now, there's a lot of talk about what Patanjali is potentially doing to regional as well as national players on the Ayurvedic or the natural products front. There is another one as well coming in with an issue, which is also a herbal product company. So I'm guessing that the theme is now getting a lot of prominent competition. It was probably always there, but you were the sole, so to say. Maybe there was a Zandu, so on and so forth, but you were that large one. Now there are a few other prominent ones coming in. and their pricing is substantially lower, if I may use that term, compared to you. Now, as a company, or are you still able to deal with the volumes because the market is large enough?
Well, I think they are expanding the market. I think the success of Patanjali indicates a very strong undercurrent of preference for herbal and natural products. So I think in the long term, it augurs well for us. The market will be big enough and expand to accommodate more than just us. And I think if the consumer preference is centered around the herbal proposition, well, it can only do us some good. Near term, of course, there would be some headwinds because the categories would take time to expand. So there would be some pressures felt in a couple of areas. But having said that, I'm pretty confident over our ability to manage the change, our value proposition, which we believe is second to none, and our premiumization strategy, which will cater to the upper end of the market for Ayurvedic products.
Do you not foresee the need to go ahead and cut prices?
No, certainly not. We don't follow that strategy. We don't cut prices. We offer better value propositions.
Okay. And just one follow-up. I'm sure Tanveer has more, but just one follow-up. Since we're talking of pricing and the impact that would have on margins, you're saying that will not happen. Do you foresee, therefore, that your EBITDA margins could stay northwards of 17.5, given the fact that copra and polymer prices are down and they don't look like going up in a hurry?
I think we can maintain the current level of margins. I see limited scope in improving it unless there is another sharp deceleration in the whole commodity cycle, which doesn't seem to be the case, but you never know. So I think the current level of margins, which are perhaps the best we've ever recorded, is something which we would seek to maintain and not necessarily enhance.
I just want you to comment on how you're looking at the competitive landscape right now, Mr. Duggal, because, you know, we've spoken to some of the other consumer companies and their volume growth was not as bad this quarter. Yes, some pricing cuts were taken. There was pricing degrowth in the quarter gone by, but, you know, the demand environment for them still look quite good. The ease on the margin side has been passed on to increasing ad expenses as a part of sales, as a percentage of sales. What is your strategy going ahead in terms of, you know, holding your perception actually in a competitive market? And also, you know, add to that, would you also be looking at scaling up, you know, in terms of acquiring some local brands to, you know, just in a way ensure that your position doesn't get weakened from here?
No, I mean, to answer your last question first, we would be looking at inorganic opportunities, acquisitions and such, but only if there's a great value proposition which emerges. We have passed, as you know, the last few acquisitions which came onto the table. We didn't believe that they offered value, and I think in the benefit of hindsight, we did exactly the right thing by not pitching for them. Going forward, we could see better value emerging, and what I mean by better value is largely in the realm of scalability. So buy something small and grow it at an accelerated pace, and also a product which basically generates good margins. So these opportunities will emerge. We've got a huge store of cash with us, fortunately, which we haven't frittered away, and so the war chest is available. But again, we are pretty picky when it comes to acquisition, so we'll buy only when the time is right. And going forward, I think if you discount the Nepal factor, our volume growths were in line, so I'm not very disappointed with those. And I believe that going forward, the growths perhaps would accelerate a little bit rather than go down. Because as I mentioned earlier, the weather did play a bit of a spoil sport with regard to a very large winter-centric healthcare portfolio, which didn't do well at all.
Great. Mr. Duggal, we wish you all the best. Hopefully, the revision downwards is not very stark, and hopefully the demand environment improves with the monsoon. Thanks so much for taking the time out. More importantly, being so candid.
Thank you.
That's a very candid management of Dabur. Speaking about there being pressure, they're trying to deal with it. There won't be any price cuts that will come in. And they hope that what Patanjali and a few other players are doing will only expand the pie as opposed to make it hyper-competitive for all the players involved. Sandeep Sabharwal is with us in the studios. In a bit, we'll also get in and talk about the charts. But Sandeep, this is precisely the point that we were making. And you kind of referred to this, that what Patanjali might do is actually enhance the pie for existing players. You just heard the management of Dabur as well. 5 or 10 rupees off its 52-week lows. What did you make of it, the conversation?
I think Dabur specifically has very good products. I think it's the, like we were discussing, it's one of the leaders in the organized space in the so-called organic or Ayurvedic space. So this expansion argument actually works, because if you see, a lot of people who would not be buying branded products, just because Patanjali is there, they'll go and try it out. Then some will be satisfied with that, some won't be. But once they have tried it out, they'll go to other brands. So that market expansion theory works. But it works as the economy expands and as people get pricing power, which unfortunately was not there for the last 2 years given the inflation dynamics and bad monsoons, but could play out over the next 2 years.
Okay.